Good afternoon, dear viewers. Welcome to our channel, where we cover the latest news from the world of cryptocurrencies. Today, on December 6, 2025, we will talk about Ethereum, the second largest cryptocurrency by market capitalization, which continues to hold its position despite market volatility. I'm your host, and in this episode, we'll break down the key events of the day, from large-scale institutional purchases to price forecasts, technical updates, and potential risks. Whether you're a beginner or an experienced trader, this summary will help you navigate the landscape. Don't forget to like, subscribe, and turn on notifications so you don't miss any updates. And now, onto the news. Discover Ethereum, a trusted project in the field of cryptocurrency staking. With an initial investment of just $1,400, in only a few weeks I was able to grow my capital to $6,000, which demonstrates the high efficiency and reliability of this platform. Ethereum uses advanced technology on the Ethereum blockchain for staking, guaranteeing you a share of the profits from the fees earned by confirming transactions on this network. Currently, the project is actively working to attract long-term partners, offering them 90% of all profits, which is significantly higher than standard terms. My experience with Ethereum confirms its honesty and transparency. Earning more than $5,000 in net profit through regular deposit and withdrawal operations proves that this project deserves your attention. Don't miss your chance to take advantage of these favorable conditions while the project is expanding its partner base and offering the most attractive staking rates. Let's start with the main point. The price of Ethereum today is holding at around $3,000. Over the past 24 hours, it has dropped by about 3 to 4%. But this isn't panic. It's more of a correction after the recent rally. Ethereum's market capitalization exceeds $350 billion, and its daily trading volume is $28 billion. What is supporting the price? First and foremost, institutional investors. The firm Bitmain, associated with the well-known analyst Tom Lee from Fundstrat Global Advisors, continues to buy up ETH in huge volumes. Over the past 2 days, they have acquired nearly $200 million worth of Ethereum. Yesterday, it was $130 million. And today they added another $68,670,000. This makes Bitmain the largest single holder of ETH. And such purchases signal a strong belief in the asset's long-term potential. Analysts note that this helps keep the price from falling below $3,000, although there are risks of a drop to $2,800 if the market continues to correct. Now, let's talk about forecasts. Tom Lee, who is often called Wall Street's bullish guru, has once again sparked optimism today. He predicts that Ethereum could reach $62,000 in the coming months. That's a 20-fold increase from current levels. And in a more conservative scenario, up to $20,000 thanks to the boom in asset tokenization. Why? Ethereum is evolving. Technical improvements such as network upgrades and institutional infrastructure are making it the ideal platform for digital finance. Lee emphasizes that tokenization, when real assets like real estate or stocks are transferred to the blockchain, is an area where Ethereum is leading. This is not just speculation. In the fourth quarter, the volume of stablecoin transfers on Ethereum is approaching $6 trillion. Analysts see this as a bull cycle according to the Wyckoff model, a phase of accumulation where smart money is buying up assets before a surge. Let's move on to technical news. Ethereum developers are actively discussing the upcoming Fusaka upgrade. This is a hard fork that will increase the network's throughput. The gas limit per block has already been raised from 45 million to 60 million units. This will allow more transactions to be processed without overloading the network. Vitalik Buterin, the founder of Ethereum, proposed increasing the gas cost for inefficient operations to address the network's growth. He emphasized that the available gas is determined by validator voting, while the inclusion of transactions is decided by the market. This is important for scaling. Ethereum is moving towards a model where parallel ZK proofs and lean consensus will become the norm. Instead of having every validator recheck all transactions, the network focuses on efficient verification. The Brevis project, integrated with ABI layer, is already verifying Ethereum blocks in seconds, reducing computational costs while maintaining security. Another breakthrough in privacy. The company Zama is launching its mainnet with fully homomorphic encryption technology. This makes it possible to create private smart contracts on Ethereum, computations on encrypted data without revealing any information. Zama is becoming the default privacy layer for Ethereum, with the Zama token used for fees, staking, and governance. This is a huge step for DeFi. Imagine your balances and strategies remain hidden, yet everything still complies with blockchain rules. Zama is already partnering with projects like Kaito AI to provide verifiable data in prediction markets such as Polymarket. But not everything is so rosy. Today's ETF data shows outflows. For ETH funds, that's minus $41,500,000 in a single day. Overall, the crypto market is in extreme fear according to the Fear and Greed Index at just 23 points. Long liquidations on exchanges like BitMEX and Binance have reached 8%, with losses in AVAX, SHIB, and Doge. Macro factors are putting pressure. A weak Japanese bond auction, rising yields on 10-year treasuries, and EU sanctions against Russia. Bitcoin also dropped by 3%, down to $89,489, which is pulling altcoins down as well. Analysts warn if ETH breaks the support at 3,000, a pullback to 2,700 is possible. What's next? Keep an eye on the Fed. The rate is likely to be cut in December with a 90% probability, which will boost risk assets. Ethereum stands to benefit from a weakening dollar and increased global liquidity. Advice for traders: don't force entries in choppy markets. Wait for confirmation above 3,200. Key levels: resistance at 3,500, support at 2,900. If ETF inflows return to 100 million per day, expect a rally.